All right, I think we're ready to get started. My name is Scott Friend. I'm the president of the CFTA. I would like to welcome everyone to the first in a series of monthly webinars sponsored by the CFTA. Today's webinar is on making the most of indirect cost recovery with speaker Roy Davey, Vice President of INSITE. Roy will be covering indirect cost recovery using your space management system as an essential resource for determining the amount of recoverable funds as well as defending periodic federal audits. I will now turn it over to Roy so he can tell you a little bit more about his background. Roy?
Thank you, Scott. That was a mouthful to say, wasn't it? Well, this is a mouthful of a topic. I thank you and the organization and all of you who are watching for taking the time to look at all of this. I've been fortunate to be involved in institutional facilities and space management for over 4 decades. I graduated from Syracuse University. They were one of the first users of INSITE, and moved to Boston, where I worked at Harvard Medical School, the now defunct Digital Equipment Corporation, and then MIT. And in all three positions, I had the opportunity to work with large institutions and large amounts of space, and with the technology to try to manage all of that. While at MIT, in the Office of Facilities Management System, an administrative office, INSITE was developed, and that office was headed by the current president of INSITE, Creon Syros. We started sharing the software with the technology with other universities in 1973 through a consortium that has grown since that time. And in 1996, we spun the organization out of MIT, and we're on our own, OFMS Inc., also known as INSITE. So how did I learn about all of this stuff? Well, frankly, it's nothing more than listening to our consortium members. They're very good at sharing their experiences and expertise and all the things that they have gone through in this very important topic. So it's just been, I've been very fortunate to be able to just gather this information, and I'm hoping that during this session I can just summarize some of the basic principles on indirect cost recovery and about the use of space management information for that and how you can contribute. So I'll begin, and first we're going to talk about some of the very basic principles of indirect cost recovery, which I'll refer to as ICR from this point on. And it is a daunting, complex, and long effort that your universities go through. There needs to be some serious motivations for doing that, and we'll talk about what some of those are. We'll also take a brief look at the federal regulations and requirements that are imposed upon your universities in order to participate in and recover the indirect costs associated with sponsored research. We'll take a look at some of the standards and structures of space information and components that are configured to support that effort. Talk briefly about the value of doing a periodic space survey, which I think probably all of you do in one form or another. And then we'll end up by talking about what you should know in order to contribute to this effort at your university, and where you can find that out, and end with going over what your value is to this entire effort. So let's start with some of the basic principles. As you know, universities are the primary recipients of sponsored research dollars from federal agencies, and you apply through the grant process to participate in research, and the direct dollars that you receive from these agencies are used to perform specific research activities. It's the collection of all the grants that are being done. So that's the revenue that's generated, and it's a substantial revenue stream. Along the way, your university incurs a number of overhead costs to support that research. And the federal agencies have said, well, that really is a cost of doing business. So if you can justify and provide evidence appropriately of those overhead costs or indirect costs, they can be recovered. So sponsored research produces both revenue and cost savings by the recovery of those overhead dollars that need to be substantiated with the federal agencies. So, as an example, supposing your university had an annual research revenue of $100,000, and you could justify that there were $55,000 of cost that your university incurred in order to support that research. That produces a very simple but critical number called the ICR rate. In this case, it's 55%. That number is very carefully negotiated and monitored and watched and fretted over by not only federal agencies but by your individual institutions because it's a mark of competitiveness. Obviously, federal agencies want to dole out as little as they need to beyond the direct dollars in order to have the research done. And therefore, if your rate is lower, that means that you are more competitive and that the same grant to you would cost the federal agencies less than it would cost to somebody else with a higher rate. So when you get that indirect cost recovery rate approved, those costs are credited against the next year's costs. So in essence, you've got a running additional stream of cost savings, which in a sense is additional revenue for your institution. So as an institutional goal, you really want to balance and optimize that rate. You want to maximize the rate because that means an increasing amount of overhead dollars that can be recovered as a cost savings to you. At the same time, you want to keep the rate low enough so that you are competitive with other institutions for ever shrinking research dollars. And in this economy, they're shrinking even more. So that desire to gather as much as you can but yet remain competitive is a fine-tuned balance that your institution goes through with the federal agency that audits you. So how are those indirect costs incurred, and how are they reported on, and how are they accepted? And that's done by a series of circulars or regulations from the Office of Management and Budget, the two primary ones being A21 and A110. And those regulations separate the recoverable dollars into what are called cost pools. And there are two cost pools, facilities and administration, where there are substantial costs to support research and where those funds can be recoverable. These cost pools, some of these F&A cost pools, remain open for negotiation, and that providing that you comply to the regulations. So these are negotiated amounts. Other cost pools beyond the F&A are either not are costs that are not recoverable, or costs that have been capped over the years at a certain amount, and you can't exceed that. So what are the motivations for this effort, which is a substantial one that many people at your university are involved in? Obviously, primary one is money. It provides a significant continuing income stream through both direct research dollars and cost savings. But there are other benefits as well. This effort and the collection and analysis of the information can often be used to support the grant and contract application process. Increasingly, grant applications are asking that the grantor or grantee provide information about existing facilities, existing resources, and existing people that can be applied to that grant. So having that information on hand, such as what spaces are going to be available next year when current grants expire, can be very useful in that application process. It gives you a measure of the facilities, the programs, and the people that are engaged in research, and helps to analyze the research income and the costs by building organization and program. In other words, you can really start looking at the revenue per square foot that is generated by research. and use that as a way of looking how well you utilize space or what space might be a higher priority to be used for research. Obviously, there's regulatory and compliance issues. You have to go through these regulations and abide by them in order to even qualify for those indirect cost recovery. And that means that it's a really fundamental requirement that your institution maintains an accurate, timely, and auditable source of data to support the costs that support federal research. Now, I'm going to watch everybody's eyes glaze over. We're not going to go into this too much, but it is important that you at least take a look at these regulations. This is the Office of Management and Budget site, and the part I'm looking at here is the educational and nonprofit institutions, and it gives you the index of the appropriate regulations that govern how you, as an educational institution, documents and negotiates with your federal agencies those indirect costs. And the primary one, as I said, is called Circular A21 Cost Principles for Educational Institutions. And it is a long, and I don't expect anybody to read this in detail, but a pretty long and involved document, as all federal regulations are. But there are some important parts in this. And for example, right here is the identification and assignment of F&A costs. And it talks about what those basic facilities and administration costs are and how they can be recovered. Yes.
Hey Roy, you're not showing up there on the screen.
Oh, wow.
There we
How
go.
long has
You're
that
back.
been?
A
Okay.
couple of seconds. But you're right now. You're not showing
All
anything.
right.
There we go. We're back. All right.
Okay. Sorry about that. Um, there are some additional regulations, A110 and A122. This one talks about um, some of the cost principles involved in performing audits, and it defines a number of terms: applicable costs, direct costs, and a little further down the indirect costs, and defines what all of those are. This is not something that you necessarily need to know to any great detail. Just it would be good to review some of them to get an understanding of what's involved here. There are some other useful publications, um, and all of these will be included in the materials that are going to be available after this presentation. There is a relatively new GAO report, a Government Accountability Office. It was produced
Hey
in
Roy.
September of 2010. Yes.
I think every time you hit one of those links, it's blanking out on them.
Okay, I won't hit them anymore then. I'll
Because
let
I
it
think
come
that's
back.
good.
We won't look at it.
Yeah. All right.
That better? Okay, sorry about that. Well, anyway, these will be available in the materials. So let's talk a little bit about these facilities and administration cost pools. The facilities cost pools, the four major ones there, all have to do with facilities in one form or another. The depreciation of equipment and the building infrastructure, the interest on debt associated with certain buildings, equipment and capital improvements, and a very large category, the O&M expenses to keep the facilities operating and maintained. Uh, the administration cost pools are listed here, and but only well. Now, what are the indirect costs that are allowable and can be recovered? They're listed there under the first section. Again, there are a number of those that are disallowed or capped indirect costs. For example, library expenses. You can attribute a portion of the library expenses in the same rate in the same ratio as your research to all space, because library supports research. However, that particular cost pool has been capped at a certain percentage. So it doesn't matter how big or small it is, you can't exceed that percentage. The ones that are continue to be recoverable and negotiable are those listed in the first section. And of those, the ones that are highlighted in red are directly influenced by the information you track in your space management system. And the way that information is structured goes a long way in determining how well you can support these cost proposals and the recovery of the indirect costs. So depreciation, use allowance on buildings, capital improvements and equipment, and O&M are all facilities-related costs. So the bottom line, this indirect cost recovery rate is critical, and let's talk about how that's true. Let's take this example of an ICR rate of 55%. By the way, across this country, the average ICR rate at universities is 52%. So let's say that your institution does just under $250 million dollars of sponsored research annually. And by the way, that is the average number across America. Well, at a 55% rate, that means in addition to that $250 million, you can recover an additional $136 million in costs that you incurred to support that research. Now, if you were able to increase that rate by simply 1%, that's an increase of $2.5 million annually in cost savings. That's a pretty substantial amount. What's interesting is that the cost of your space management effort, both the technology and the resources that use it, is also recoverable at that rate. So that means supposing that your total space management budget, technology and resources and activities was $200,000 in a year, $112,000 of that can be recovered. Now, that is really something to check with those people who are doing negotiating your rates and putting together the cost proposals every 2 years to see if they indeed are incurring this. It's the same principle that when you buy tax software to do your taxes, you can deduct the cost of the software itself. Same idea. And this is not something that's often thought about, and in a way can justify the cost of your whole space management budget. So what are some of the information and components that support the requirements? Well, first of all, your institution needs to be able to amass the information about annual building costs and those that are allowable, and the allowable recoverable indirect costs. But also, the requirements are going to have you pay attention to several major components about defining space, and that's where you come in. You need to define building area by using an acceptable area classification system. You need to accurately allocate the space, room by room, to the departments that are performing work in it. You've got to be able to allocate the activities in a space. That's what we call program functions. Examples of program functions are research, instruction, administration. You get the idea. So the room has a formal use like office or conference room or lab or whatever. And in addition, it has functions that occur in that room. And the functions aren't necessarily related to the use. Research can occur in an office or in a lab or even in a lounge. Next, the proper proration of activities in each space. You have to account for 100% of the activities going on in the space. And finally, being able to tie those grants, those specific research grants, to space is an important component. So we're going to take a quick look at just some of those, some of the fundamental metrics: the building classification of space, room-by-room area definitions, and the proration of space area to program functions. Uh, you're probably familiar with this method of classifying building area. It's used in the commercial world called BOMA, and that's basically just sort of a real basic diagram of how BOMA area is defined and allocated. Um, and that's one way of classifying building area. The other way, and one I'm sure you're familiar with, is FICA, Facilities Inventory and Classification Manual from the National Center of Education Services, and it measures and classifies space as in this way, and it takes gross square feet, removes the structure portion of that, and what's left is net usable square feet, and that's broken down into assignable and non-assignable space. Assignable being the space assigned directly to an occupant for their specific use, and non-assignable space being space generally in support of all occupants of the building. Now, the recovery can only be collected on the prorated portion of assignable space. You cannot recover monies that are attributed to non-assignable space. So that's the first important thing, that you'll need to use the FECM building area classification method as opposed to BOMA. And in BOMA, as you know, the measuring of an area in a given room is from center line to center line, where in FECM it is inside face to inside face. Again, an overly simplistic view, but that's basically the difference. And the regs do require that you use FECM standards for determining areas that are used to determine the ICR rate and ultimately the dollars returned. Now, the next thing is that you need to be able to very accurately portray how space is being used and who it's being used by. Typically, it's very straightforward. A given room has a given department in it, and they're using it all the time. For example, here, 121 and 123 each have one department in it. But it's not uncommon anymore to have multiple departments using the same space. They may share it either by area, they may share it over time. One uses it half the year, the other one uses it the other half of the year. Or increasingly, research is done by interdisciplinary teams. So the first thing is you have to be able to portray that accurately and be able to assign one or more organizations to a space on a pro rata basis. In this case, Department A's total is 540 square feet, Department B is 260, adding up to the full 800 square feet of space. Now, in addition to these departments assigned to those spaces, those departments are performing activities or program functions in that space. Let's take a look at just two simple ones to give an example. They could be doing research or they could be doing instruction. Now, this is where it gets a little complicated. Let me give you some examples. Department A could be doing nothing but instruction in that space. So 100% of their activity in that space is devoted to instruction. Now, department in the second room, two departments, each may be doing something different. In this case, B is doing instruction and A is doing research for 100% of the time that they're using that space. Or there may be a single department who is doing both kinds of activities or functions in the space on a pro rata basis. So as you can see, it's not assigning functions directly to space is not the full picture on how space really is being used. And in this case, when we do the pro rata calculations, we find out that out of that 800 square feet, 320 square feet is being used for research. So all of those are important opponents of that, and that has a lot to do with how your space inventory is structured. I'm going to use INSITE as an example of one way in which that information can be structured to support the ICR effort. Now, our web-based NetFM space database has a number of characteristics and features. The ones in blue are singularly important in this ICR effort. The ability to assign multiple organizations and multiple room uses to a given space on a pro rata basis, the ability to have multiple program functions assigned to organizations in space, and validation to make sure that you are using that you are accounting for 100% of the programs in 100% of the organizations in 100% of the spaces. And finally, being able to tie grant information to spaces, where you could have either multiple grants in a single space or multiple spaces participating in the same grant. So the structure is pretty important here. Here is a given space, a space record, and here are all the components that are assembled to produce that space record. And as you can see here, for example, one is that there's an organization hierarchy which can mime exactly the way you are organized, and one or more organizations can be assigned to that space. Similarly, the hierarchy here reflects the FECM standards for classifying space by architectural room use, and multiple room uses can be assigned to this space. And then, in addition, information about indirect cost recovery and grants. Notice that information is not assigned directly to space, but through organizations assigned to space. So, as an example, here are two rooms, 208 and 209, in which in 208 there's multiple organizations assigned, and in 209 there's multiple room uses. So here's a screen that shows where you could put in these multiple organizations, and it checks to make sure that it won't accept this record unless you're accounting for 100% of the space. Similarly, you can put in multiple room uses, and again, their proration their percentages have to add up to 100. Now, in terms of ICR and grants, as we said, ICR basically is assigning functions, program functions, based on federal requirements, to spaces. But notice that those assignments are made to organizations to spaces, not to spaces directly. Similarly with grants. Grants are assigned through organizations to spaces. And so it is the way to accurately portray exactly how space is being allocated and utilized in this area. So here's an example. This is a table of the acceptable A21 cost pools, and so that when you're reporting and defending audits, you're going to be accumulating information to these cost pools. However, you as an institution may want to be more granular about that, and so besides having this major category of functions, you can also have assigned to it many more detailed categories for your own internal analysis, as well as for supporting the ICR effort. So here we have one room 208. It's shared by two departments, and those two departments have these program functions in it. One department is using it 100% for something. Another department is using it on a pro rata basis. And this is an acceptable and accurate way of describing exactly how space is being used, that is used to defend you in audits. And again, it's a relatively simple task of being able to assign multiple organizations and checking to make sure that you're accounting for all of the activities going on in that space. So with that done, you can then do queries. For example, here's a query of all spaces where there's federal research, regardless of what percentage there is here. And tying this with area, you can easily come up with what is the total area that is for federal research as a ratio to all the assignable area in the building. It's also nice to be able to see that in a query. And this is our built-in floor plan viewer with that query result, and it even shades the space a portion in the proper proportion. So that room 292 is shaded 50% for research, and there's 50% for something else. This one is a 70-30 ratio, or whatever the case may be. Very useful tool, particularly to departments when they're trying to identify what research grants are going on in what rooms. And here's a query which is just is looking at all of the research that's going on, and again, it is prorated appropriately. This system allows you to produces queries as PDF files, but they're dynamic PDF files, and one of the things you can do is alter the appearance of it quickly. In this case, we just turned off one of the components of the space label and then redrew it. So it's really important that your space information is accurate and that it's timely, and we'll talk about both of those. Accurate because part of withstanding audits is that you must fully justify the space according to OMB circulars and government auditors. And that accuracy will be tested. It is not uncommon for a government agency, your cognizant agency as it's called, that's the agency such as ONR or DCCA or DHHS that monitors your or DOD that monitors your research activities. It's a specific agency allocated to assigned to your university. It's not uncommon for them to take a sample of spaces. They'll ask you for, let's say, 100 spaces, and they want to see the floor plans for it, and they will go out and look in each room and say, yep, is this room 101? Is it still an office? Is it still the same size in the same area and shows on the floor plan that way? And is it assigned to the chemistry department? And let's say those 4 pieces of information for each space, and they look at 100 spaces, and they find, oh, I don't know, 10 items wrong. So that amounts to 10 over 400. It's some percentage, some small percentage. Maybe it ends up being 1% error. What they will do is assume that that error rate occurs across your entire database, and therefore will assume that they have a stronger negotiating position to reduce your ICR rate based on the fact that your database is in error. So that is why it is so critical that it be accurate. It also needs to be timely, because it's as you know, it's impossible to keep track every minute of every day of exactly where the database stands, where the space information stands in terms of complying to federal regulations. So in the typical audit, there's an agreed upon date, usually based on your fiscal year, in which the configuration of your physical plant is frozen. And that information is used in order to determine the portion of space that's available for recovery. And so, but your information needs to be timely because it's not known necessarily when in advance exactly when that snapshot is going to occur. So it needs to be accurate all the time. You need to be able to use acceptable methods to prorate program functions and to associate grants in space. So it is really important that that information is critical. So what's your contribution to this? The use of space for conducting research has to be justified. That requires you to have accurate space inventory and acceptable methods for prorating that space. So you are the potential best source for that accurate space inventory, for a timely source of space information, again, tied to the requirements of your institution's particular audit cycle. A comprehensive and effective departmental survey to confirm the accuracy of information is important. We'll talk a little bit about that in the future, in a little while. A good allocation of space to departments, research programs, and grants, and proper proration so that you are accounting for 100% of all activities and 100% of all spaces. So I think probably all of you do perform a periodic survey with your departments in one form or another. My experience has been that up to this point, most of the time that means putting together a list of spaces that belong to a particular department and printing out some floor plans and going to a departmental representative and sitting down and doing an interview and saying, Do you still have this space? Is this grant still going on it? Is this all that kind of information? And then that's all brought back, amassed, and the information is used to update the database. An online survey is a much better way of doing it. It's a great way of bringing together the collective contributions of those who have the most interest and knowledge about the space, obviously those individual departments. And it also brings conflicts, a great deal of visibility right away when two people claim the same space or no departments claim the space. It's a good accountability tool. There's a central collection of the survey results that it ensures that there is a consistent method for determining accuracy. There's a central agent for resolution if there's a problem. And so accountability is very important. And here's another important thing. The federal regs say that in proving that a particular space is being used in a particular way, the trail of evidence for research programs and for the negotiation ultimately ends at the department. The department signs off on it. At that point, if the department says that space is being used for research, that's the end of the line, as long as it can be tied back to a grant and et cetera. So a room-by-room online space survey that is done by the departments themselves is a great way of fulfilling these requirements. This is an example of the summary screen for INSITE's Space Survey Manager. And individual spaces could be looked at. In this case, in the summary, it's showing that in this space, a change was made to both the use and a principal investigator that's in it. But it's a powerful tool. Each department contact gets the list of their own spaces, and they go through this and online, make the changes. Those changes are stored in an intermediary table where the administrator can resolve conflicts, go back and verify everything, and then that information updates the space database with a push of a button, basically. So, in accomplishing the indirect cost recovery, there are a couple of things that are important for you to know. You may know some of this already. Who participates in it at your university? Typically, the institutional research department organization is where it is centered and is the focus for it. Obviously, there's contracts and grant administration. Physical plant is a source of a lot of information about costs in particular. And then, of course, the space management effort, where information about space is kept. When is it done? Well, with some exceptions, the audit cycle is a biennial process. It's done every 2 years. And it is, however, determined by your cognizant agency. And it usually is tied to your fiscal year. And the effort to respond to that audit and to negotiate your rate is a substantial effort. It goes on for a good part of the 2 years between one audit and the next. And what's the best guide? Well, there is another document. I won't open it now, but it'll be in your materials. It's a OMB Circular 821 documentation requirements, which gives some good examples of how reports need to be structured and what information are in them to respond to the audits, the auditors, and the requirements of the regulations. As I said, the audit cycle follows a periodic timetable tied to your fiscal year, and we talked about the fact that already it takes a long time to do that. A lot of work goes into it. One of the things that supports that is some technology called cost models. Many of your institutions will develop their own models using Excel or some database to assemble the proposal, bring together the costs, the grants, the appropriate cost information, grant information, space information, et cetera, and assemble that into a series of reports with evidentiary documentation that is used during the audit process. So there are, and there are also tools to provide that evidence to withstand the scrutiny of your cognizant agency. One of those models, cost models, the one probably a number of you are familiar with, a comprehensive rate information system, or a CRIS. I would suspect that many of you use this, and it's a great system that allows you to assemble these various parts of information, and it does provide the tools and the reports and the analysis and the statistics specifically to assemble that proposal for the F&A rates and stay in compliance with A21, and therefore maximizing the level of F&A dollars that can be recovered. Some of the reports that come out of models like CRIS, internal reporting, this is for your information, space listings with departments and functions, summary reports, charts, and cross tabulations. Of course, a lot of this stuff should be able to come directly out of your space management system as well. External reports are those that are generated to respond to the auditors and the regulation, documentation, and audit requirements. So what should you know about this so that you can actively participate and contribute to your university ICR effort? Well, obviously, the basic principles of indirect costs, and I hope this webinar helped with that a little bit. A basic understanding of federal regulations. Again, while I wouldn't recommend that you sit home at night and read these daunting regulations, it would be a good idea to review them. There's a lot of good information in there. They're fairly well organized so that you can become more familiar with what your university has to go through to comply to federal regulations. Who is your cognizant agency? What is the federal agency that is monitoring your research activities? And they will be the ones that will be performing the audit. And also, another thing, what are the number of research? How big is your research revenue? How much money do you get each year in direct research dollars through grants? Good number to know. And also, what is the audit cycle, and what's the proposal effort like, and when does it occur? What are the information resources? Where does the information come from? You should know where the costs come from, where grant information comes from. Obviously, you know where space information comes from. So, what should you find out? Well, first thing is find out what organizations at your institution provide that information using the effort, who gather data and assemble the proposals and participate in the audits and the rate negotiations. It would be a good idea to find out who does that and actually go and talk to them if you can, and just find out what their effort is like, what tools are they using, and what ways you can help them. And what are the efforts like? What does it take to put together the data and the cost models and the compliance documents and the reporting and analysis? And who are the resources that are applied to this? And also, what are your contributions? We talked a little bit about the role of space information and your space management system, and others need to know that, if they don't already, that you do have that information that can support the audit process. And of course, the more accurate and timely that information is, the better it is for them and for you. So it's when you do contribute, when you do participate, everybody wins here. You're a winner because your visibility is increased. You have become a valuable information resource, and your space management system and staff effort can be recovered. So there's an additional ROI to think about to justify the budget for your space management effort. And your institution obviously is the winner because they can be more effective and efficient in responding to audits. They can do a better job in supporting the grant application process, and they're audit ready with a strong defensible position and a position in which they can negotiate that rate. And there are a number of institutions that, because they are not in this position of having all that good information, end up negotiating a fixed rate over a period of time uh, that basically is determined by the federal agency and not by them. And typically that rate is lower than it should be. There have been a number of cases I'm aware of where that fixed negotiated rate uh, was changed in 1 year because the institution had better information, particularly about its space, and the rate went up. So it was very useful to have good space information available in forms that can respond to the ICR effort. So as I said earlier, the webinar materials are going to be posted on the CFTA site as well as a recording of this. If you have additional questions, or I can also provide the materials, and there's my email address. And I thank you very much for your time for this. And I've been doing all the talking, so I'm going to switch over and take a look at some of the questions and see if I can answer them for you. So I don't see any right now. If anybody has any, if not, feel free to write me, and I'll try to answer answer your questions that way. Okay. Anything else? Scott, I'll turn it back to you.
Okay, I would like to thank Roy Davey, Vice President of INSITE, for his presentation on making the most of indirect cost recovery. We will be posting the presentation material on the CFTA website for download, and we will also be posting a recording of the presentation online for viewing. So look for links on our website soon on where to find this information. I would also like to announce next month's webinar. It will be on Thursday, April 25th at 1:30 Eastern Standard Time. So look for the announcement on the topic on our Facebook page and on our website and our listserv. And with that, this concludes our webinar. Thank you for attending, and we look forward to seeing you next month. Thank you.